Hi everyone, welcome to the Tradies Family Podcast. I'm your host Frankie, the founder of the Tradies Family. I'm here to bring you practical, down-to-earth advice and support for partners of trade business owners, helping you achieve that elusive work-life family balance. I understand what it's like to be in your shoes. As the wife of Greg Allen, trade business owner and founder of the Tradies Success Academy, I've ridden the roller coaster and I've learned firsthand the challenges, struggles, juggles, and joy that living within a trade business can be. So if you're ready to reclaim your work-life-love balance, join me on this journey. Let's support each other and figure this out together. Okay, Chantel, how you doing?
Yes, good. How are you, Frankie?
Good, thank you. Thank you for joining us on the podcast.
Anytime. I love that we're both using our non-full names, but the name that is more familiar with us,
Yeah,
to our friends, to the people around us, and that's the reality of being real with everybody and being open.
Yeah. Well, it's so good. And it just came to mind, like I see you over the top of my computer and we chat every morning. It's like hi as poking our heads over. But today I wanted to just steal all the information in your brain, and I know that can't be done in 45 minutes.
Oh, that's dangerous.
But everything when it comes to finances, because it's such a unknown minefield and it's such a stressor for so many people, right? So I just wanted to, so first of all, what do you do at the Academy?
So at the Academy, I am the accounting coach. So I help a lot of our members on all the levels of the program that we're doing. I'm really passionate about getting members coming in through the program. I see them in incubator for a couple of the sessions. And then as they come into our growth systems phase, it's really important to me to, grab hold and work with them, whether it's one-on-one or small group environments, depending on obviously financial, there's a bit of sensitivity. But working with them and just working out, there is no wrong. There is no, I'm not doing enough. I'm not doing this. I'm not doing that. It's let's just work out where you're at. And then let's see what we can put in place now so that as you go through the journey of growing a business, you're not growing for the sake of growing without those fundamentals really locked down. And so I think sometimes a lot of that can be just awareness. And I know I find a lot of our members are like, oh, I'm sorry, I don't have this in place. I don't have a process for that. And, totally not a judgment. We all start where we're at. We build our processes where we go, as we go. And I think it's just really important to really understand some of those key and more simple concepts. That doesn't mean you've got to be in your accounting program for hours. It doesn't mean that you've got to look at it every single day. It just means that when you are looking at, my aim is to give you as little time in your accounting program as possible, because we all know you really don't like doing it, but for maximum impact. And that's where I'm passionate. So I've had background in corporate and management finance, property development, bookkeeping, ran my own bookkeeping business for a lot of years, and in the past 6 years inside of a chartered accounting practice. So when I joined the Academy, it was something I saw was missing in the industry that I was really passionate about, jumping in and sort of getting that really core fundamental.
I absolutely, I love that so much. And what I love most about you is that because it is such a sensitive topic for so many, because it does cause so much stress in so many areas, that when people are talking to you and disclosing sensitive information and being quite open and, vulnerable about things that they didn't know before. And, sometimes we want to call them mistakes, but they're not, they're lessons, because unless you know something, how can you do otherwise? So when they're disclosing where they're at with you're such a soft landing point and understanding that you're, educating people in a really, really soft way. And like you said, that can be really, really effective. So thank you for all of your work. But
that's totally
fine. What you do. So, but what I wanted to, apart from all the million questions that I want to ask, I would like to go with you sort of through the journey of even starting up a business and the sort of navigating the path of starting up a business, and sort of some of the pitfalls that some people sort of get into, or the nasty surprises along the way. So when most people start up a business, right, it costs money. So getting your van, your logo, applying for your ABN, all these sorts of things add up, right? And they're even your tools and your marketing. And so usually they're taking money from their personal account and investing this money into their business. Yep.
Mm-hmm.
So then,
absolutely.
So then I guess, and what in our journey, and Greg and mine's journey, I didn't realize that it's sort of like, here we are giving the money over. And I don't think we really listed or kept track of those finances as we went. So it seemed as like, I'm going to pour money in, and when that money comes up like a bit of a profit, I'm then going to pull it out, because technically it was my money that went in. Do you find when we talk about that sort of attitude, which I guess that was our naivety and not understanding exactly how our business worked in that first year, what sort of pitfalls happen when you've got that set up?
Look, I guess the main thing to kind of consider is that it doesn't matter whether you're a sole trader, company, trust, whatever that structure is, right? That's just a structure of doing business, getting your ABN, all that kind of thing. I think what you've got to look at is, regardless of what that structure is, you and the business are two completely separate things. Now, as a sole trader, that's really hard, because hang on, it's my ABN, it's my name, I might be trading as something, but it is just me. But I think the really important part is to draw that line in the middle and say, okay, this is me and this is my business. And, you know, with things like cash flow, if you're investing money into a business, you know, what we do with that in a business is keep it in the balance sheet, and it's called either drawings, capital invested, director's loan. All those sorts of terminologies are what we use to track how much money we've put into a business. But I think essentially you've got to see that as, okay, I'm investing in the business. So yes, the business has a loan to me. And at some point in time when the business is operational and it's profitable, it's not necessarily the profit on that bottom line that's going to get that money back out. It's, you know, you're investing. So all of those expenses, your marketing, your tools, your vehicles, whatever it is that you've got to buy. For a lot of people, they would look at that and say, oh, they're expenses, I'm not making any money. Yeah. And what I often redirect people to is that, yes, they're expenses, because expenses you can claim in your tax. But an expense that is for the purpose of building your business is more like a type of expense that is an investment, right? So you've got to sort of identify that separately. You know, the day-to-day runnings of your business are very separate from the investment expenses that, you know, you might not make a profit for the first year, but if you're reinvesting every cent of that to grow your business, that's not such a bad thing, right? If that's the intention. And so what you might do with, you know, the money that you've invested initially, you might sit that there and say, look, I'm just going to leave that in here because I want the business to be fully operational. I want to invest. I want to build it up and do all those things. When I then have myself and a few extra staff or whatever that looks like, then I can start thinking about pulling my investment back out.
Mm-hmm. And that's right? That loan obviously that was owed to you.
Yeah.
Yeah.
That's right. So it is, if it's $20,000 that you're putting in, then until you pay that full $20,000 out, there's no tax, there's nothing else. It's a loan, right? It's just a loan that you're repaying. There's certain rules in different structures about how that looks. But I think it's really important to identify that whilst we have, you know, our loan and our director's loan and everything that a lot of members and a lot of business owners don't look at, I almost think it's worth having a separate section, you know, one that the accountant puts all their transactions through and all that sort of thing, and the other one for, here's my initial investment, I want to see it, and if I'm taking money out of it, I want to be taking it out in a lump sum because I know that the business can support on its own.
Yeah.
And I think it's really just drawing that line between business and personal, which I think probably the core issue that I see in any business is that we're treating it like our money as opposed to our business's money, and we get to choose how, that employee gets paid, i.e. us as a business owner.
Mm-hmm. Mm-hmm. So that defining that you as a person and your personal life and your personal expenses are very separate to the business as an entity. And anything
absolutely.
you do personally needs to go through your personal accounts, and anything you do with the business needs to go through your business accounts. So making that really clear definition. Now, I guess I also want to talk about the stress that goes behind starting up a business, in the fact that you have quit your job, your full-time job that was bringing in that income, and you've gone and decided to start your own company. Now, you've thrown a whole heap of money as your director's loan into the business to get it going. When would you start paying yourself? Just because you've quit your job doesn't mean you have to be not being paid anything, right?
Yeah, absolutely. So I think, look, the reality of it is, when you've got a business, you can choose to pay yourself whatever you want. But it's going to be a case of, well, what can the business support? And more importantly, what do you need for your lifestyle? So even businesses that are making, a fairly decent amount of profit, sometimes I've seen business accounts where the owner's being paid $45,000. Now, that sounds like the lowest possible wage and probably below the minimum wage. But what that is it tells me straight away that their accountant or somebody that's financially advising them is advising them around taking a salary that is good for tax, right? Because the $45,000 limit is the 19% sort of tax bracket, and then you go up into the 30s. So that's the point where an individual tax rate and a company tax rate, that's the point where you skip over that line and you might be paying more tax. So I think sometimes it's about what works best for tax, but majority of the time, and especially for a business owner starting out, identifying your needs. What is it that you physically need to survive within your family unit, within your personal life? What is it that you need in your pocket every week? And can the business support that? Because, there's no point in saying, well, my costs are $2,000 a week in my pocket and the business is not turning over enough to generate that kind of profit. So I think it's a gradual process, but essentially it has to come from a place of, what can I live off right now? And then looking into it as a progressive pay rise, kind of like starting off on a trial pay and then going through the ranks of, in any other business. What can I support my family or my needs with? What is good for the long-term goal? And this is where, people like accountants, financial advisors, Steve Nivert that we have within the academy, those sorts of people in your life are going to help you define the why.
Yeah.
But the business is there to support, what do you need? There's no point saying, oh, look, I'm just going to pay myself this much if that's not going to work for your lifestyle and, your basic needs. So I think it's a combination. Yeah.
So maybe it's sort of like you're figuring out, so I'm going to go into business. You figured out what your personal expenses are, and this is what I need to get paid. Then you're going into business and you're making sure that you can support that wage for yourself. Because
absolutely.
And when you it's not like I've covered costs and this little extra bit I'm going to pay myself, unless you are paying your wage to yourself. So that business entity is paying you, the personal entity, a wage, then you're not profitable, right? It's sort of like anything on top of your wages would then be a profit, because
that's right.
You need to be able to live. And then as your business grows, then your wage can increase. Like you said, the trial.
Yeah, that's it. And I think too, like I know when we see a lot of our members use like our cost of operations calculator, and I often see them putting, if they are being paid $45,000, they're putting that in the calculator. And it's like, okay, well, we're building out our business for what it needs to support. And if you're only needing it to support 45,000, then guess what you're going to get? That's the outcome. So it's really important to put in a wage that is at least within the industry, a norm for someone in your position. And then, look, it's not important as to how that comes out because, like I said, as a business owner, you have lots of choice. So whether you take it out as a weekly wage, whether your accountant advises you to say, look, take it out as drawings, as a loan. But what we're going to do with that is, as you go through the year, we're going to take it out as a loan. And then whether it's at quarterly intervals or at the end of the year, we'll determine whether it's best to call that wages with super and PAYG, or whether there's some other ways to do it, like pulling out your initial investment, like, doing other things with it. And we'll work out how we work out our figures based on what's best for you. So it's not important if someone says they're drawing out a regular amount, but they're not classifying it as wages. So long as that's done in conjunction with your accountant, that's totally fine. It's just about having a having a plan rather than just doing it, as you go. I know one of the things that I found in my bookkeeping years is I took on a client that basically had a card and they had their business and it was just a tap and go, and it was tap and go for everything. So whilst I was very sensitive to the fact that that's their business and that's how they want to run it, I did identify to them, firstly, that they were paying me to reconcile and sort out a whole heap of personal stuff. Secondly, I would have to question every single transaction to work out whether it was business or personal.
Which is more hours.
And then yeah, absolutely. And then thirdly, they would get to the end of the year and it's very, very easy to make, let's just say, $80,000 to $100,000 if your business is of that size, disappear in small amounts that you don't recognize. Whereas if you were, and this is the core thing that I always say, is if you've determined that your needs are, whether it's $1,000, $2,000, whatever that is, that's no one's business but yours. If you've determined that's what you need, you are far better transferring that out of your business account into a personal account, and then you can spend it on 100 different items if you want.
Sure.
And then it's nobody's business but yours, and you are very much aware that if you're pulling out $2,000 a week, it is $100,000, get over $100,000 a year. So it's more I think the awareness of those types of, what are you doing, and are those coffees, dinners, gym memberships, all the things that are potentially personal expenses. If there's something your accountant says to you, look, it's possible we can claim that, put it through the business, we'll work it out later, totally fine. But if it's just the fact that you're, pulling out a card and it's the business card and it's being used for all your personal, you're actually creating a bigger headache than what is necessary.
Yeah. Absolutely. I love the way that you explained that. It's really simple to understand because it's so many times people are like, oh, you can claim that on the business. Oh, you can claim that on the business. And you can claim that in the business. But when it comes to it at the end, tax time is a stressful time as it is. And if you're just trying to claw through all these receipts and try and make sense of it all, it's so much easier if you just do one payment across. Here is your wage. Go do with it as you please.
Yeah, absolutely. I think it's just even, the accountant at the end of the year will do what they need to do and they'll claim what they can and look at all of those different parts. But I think it's more of an awareness because it's very easy to make money disappear. We all know it. Yeah. You've got money sitting in an account without any kind of budgets or controls in place, tap and go. You can burn through money very, very quickly. And it's the same sort of thing. Yeah, that's right. And we've often had my profits showing as, especially for a sole trader, my profits showing as $100,000. Where is the money? And it's very, we can quickly identify this is where it is, but it's very hard to sort of say, oh, I had no controls around that. So that $100,000 has not been spent wisely or spent in a way that's going to maximize my lifestyle or my business. It's just been spent.
And that's when when the tax man comes knocking or the BAS comes, and that's when it really hurts because your business is saying that you should have, this much sitting there if you haven't allocated money for tax and BAS. And they're saying, where's the money? And you're going, I thought it was my money to spend.
Yeah, so that's exactly right. Can
you tell us about when So when do you need to pay tax? Can you please make tax and BAS really clear? Because it took me so long to get my head around this.
I was gonna say, I'm glad you didn't say make it exciting, because I'm not sure I can quite do that.
Not exciting.
The excitement about tax is that you eventually get to a point where you're making, not so much making, huge amounts of money that you don't care, but you have an effective plan that you're making as much money as you can in your circumstances, and you're holding on to as much of it as you can legally. And that's kind of the part where, it gets a bit more kind of interesting. But I think the one thing I would say is that, you go through a whole financial year, and if you're in Australia, we work on 30th of June financial year. So when we get to 30th of June, whatever happens during that time, we sort of draw a line in the sand and say, okay, let's start with next year. And whilst there's a lot that an accountant can do with certain elements of that tax after the 30th of June, things like super contributions and other, business purchases and things like that, if you want to be able to claim those in a certain tax year, then they really have to be done, before the 30th of June. True. So seeing your accountant in April or May and just saying to them, look, I'd really like to pay for an hour of your time or whatever it might take to sit down and work out, okay, this is what my business is telling me. Now what can we do about it? Whether it's to reduce the amount of tax, whether it's to effectively see what processes we can take. But consider if you're wanting to buy a vehicle. Now, we used to be able to claim the whole thing. We now have to claim it over within 4 or 5 years, which is pretty normal, and that's how it used to sort of be. So whether you're buying a vehicle now, if you were intending to buy one anyway, and you can buy it within that year and you can have some sort of tax deduction that might help you, we're all about defer, pushing it into the next year and the next year. But once you've identified exactly what that is, you might have up to sort of 10 and a half months to actually have to go and then pay for that, because for most businesses, if they're using an accountant or a tax agent, you've got until sort of the middle of May, potentially other sort of timings, but you've got a lot of time between the day that the 30th of June ends, the time that you then go to the accountant, and then the time that that's necessarily due. But I find that the sticking point for a lot of businesses, especially when they're in new business, is that they go through their first year of trading. Let's just say they had, they started off well, they had some existing clients, they were able to sort of, really ramp it up. And for whatever reason, whether they took wages or not, they had, say, $100,000 of profit in the business. I mean, that would be lovely.
Yes.
Doesn't always happen that way. But let's just say that is the case. And, in the circumstances of, say, a company, possibly that could be around 25%. We're just using very rounded and generic terms. If that's a $25,000 tax bill, okay, that might not be, identified until maybe early in the new calendar year when you go and see your accountant. But all of a sudden, if you've made no allowance for that, you've got $25,000 sitting over here. And then as soon as you lodge that tax return, the tax office is going to say, okay, well, we don't want you to have $25,000 in debt next year. We want you to start paying quarterly.
Yeah.
So we're going to break that down into, equal installments. What's that? $3,750. No, what do we say? 12. Yeah, something like that. Anyway, no, $6,250. God, my calculations that time of the year. But yeah, let's just say for rounded sake, it's $6,000 a quarter. So all of a sudden you have $25,000 that, has to be paid maybe April, May, depending on timing. But you also then start having on your quarterly BAS return an additional amount that is a prepayment towards the following year's tax.
Yeah.
So it's the tax office's way of saying, we don't want you to continuously build up this tax and have a big debt at the end of the year. We're going to get you to make installments. You might only get 1 or 2 installments within that year, towards the next year, but it's basically prepaying your tax.
Right. Based on last year's financials.
Yeah.
But then if you're still, you're on a, say that same business owner with this magical 100K in their profit from their first year of business, then they've got a $25,000 bill, which they're going to pay on a payment plan, say in the following year, if they don't have that $25 sitting there because they've spent it all on personal coffees, $25,000 on personal coffees. So if they don't have that,
that's a lot.
Yeah. So if they don't have that money, then they might go on a payment plan. But then on top of that, the tax man is saying you have to prepay your tax as well. Is that how that works? So
absolutely.
Then you're paying double tax. You're paying the year beforehand as well as the year ahead. So does that mean in that year ahead, then you're going to be, now I'm even?
Look, potentially, depending on the timing, but let's just say you lodge and you've got 2 quarters left that you haven't lodged, and they've asked you to do the $6,000 kind of payment, within each next sort of installment that you've got. You might have paid, your next installment. So you might next year, let's just say exactly the same circumstances, end up with $25,000 tax bill. What happens with that is that you've already paid $12,000 towards it. So it just means that you've got this prepayment of tax towards next year. But without going into like all the stickiness of all the details, that point in time where you identify an existing tax debt, and then you also get a letter from the tax office saying you're now going to have an ongoing tax installment, is often a very big sticking point for cash flow.
Yes.
For a lot of businesses, because don't forget, we're only talking about the profit of the structure that you're operating under. And look, it's different for trusts and everything else. Like, this is a very generic example. But you've then also got your GST, if you're growing, your staff PAYG, and your staff super that are still due quarterly. So they sort of sit over here. But when you've got those BAS payments, it's a very confusing thing for a lot of business owners and in the financial world, but that installment for tax actually is paid on your BAS.
Right.
So all of a sudden now you have GST, PAYG, and income tax installments within that BAS due every quarter, and then obviously super over to your super fund. So it's that sticking point. I find it's whether it's 18 months, but after that full first year and then another few months goes by and you've identified a tax debt, if that's the case, it's that point in time. And so what I find when we have, whether they're members of the academy or just people that I've dealt with over the years, it's the earlier you can put a process in place, the better off you'll be, because we're not talking about businesses necessarily that are going to sit still and just continue in the same fashion. We're talking about businesses that are potentially growing.
Yeah.
And if you're growing, those numbers will get larger. So it's putting in a plan. I hate to say budget, but a plan early enough and a process early enough that if you're skimming money out of your regular operating account every week or every fortnight or, regular intervals and putting it away to the side, I always identify it like planning for a holiday. I know you've got one coming up. It's exciting, it's beautiful, and we really encourage, you've got to take time out. But it's the same as, planning for a holiday. If you get your pay and it goes into one big bucket of money and you're trying to save for a holiday, it's very difficult when everything's coming out of that. So putting that money aside and seeing it grow, even in small increments, it means that you've got it sitting there and it's been separated. And I always say, okay, in a perfect world, you could do that. Cash flow doesn't always work that way. Clients don't always pay, all that sort of thing. But if you're identifying that amount and drawing it over, you've also created this bucket full of money for yourself that is a potential short-term internal loan.
So when you're saying processes and when you're saying plan and budgeting, you're meaning when the money is coming in from the business, then you're putting it in certain pots allocated for certain things like tax and BAS. So when you're saving for that holiday, you're saying, I'm going to take 10% of my wage every week and put it in my holiday account and I'm going to leave it there. So like in business, every month, I'm going to put a percentage of my business profits into the tax account because I know that the tax is going to come and I'm going to need a big lump sum of cash. And instead of, scraping the bottom of the barrel in that business running of operations cost account, you're going to go and get it from that savings account in your tax savings. So you're saying the sooner you do that, the easier and less stress it is, right?
Yeah, absolutely. And I think it's just about, if you can identify it, and I know you've spoken about percentages, and that's great. I often hear a lot of our members say, I'm just counting up all the invoices I got and putting 10% over. Now, some of those basic calculations are, within a certain range, but there's also reports at your disposal and information that's sitting within your accounting software that can tell you pretty accurately what that's going to be. And then having an awareness around, like I said, the income tax. It's a very difficult thing to determine because your accountant's job is to try and get that figure as low as possible, doing all the right things. So we don't know what that is until the end of the year. But if we can have our eye on, let's just say 25%, if we're always kind of looking at that for not the cash that you've got in your bank account, they're two very separate things. The cash is, where does it need to be? Who does it belong to? What's the timing? That's what the cash flow is all about. The profit and loss is all about, this is the operation of your business. Whatever is left over at the bottom is what we then have to pay tax on and determine what we're going to do with it. And whether that's, wages, whether that's buying new vehicles, whatever that might be. So they're two very distinctly different things.
I love that. I love the way that you said that. And if you can just sort of solidify that more, even in my mind, what you said there about cash flow, it's sort of like where it needs to go and the timing.
Yeah.
Can you elaborate a little bit more on just the cash flow? Because I feel like in, like most of us are taught, like if you have a bill, you have to pay it now. Whereas like before you were saying defer, which is like push ahead. And then you're talking about cash flow because it's, the right timing and where it needs to go. It's like this forever moving, moldable, elusive sort of thing, cash flow. So can you talk a little bit more about, I guess, that mentality where it's, I assume you and I were brought up on that. If you have a bill, pay it straight away and then you move forward. But then in business, it's sort of a little bit of a different attitude, right?
Yeah, look, it is. And I think it gets down to, if we always push for, making sure your payment terms are as tight as possible, because we know that whoever can hold on to the cash flow long enough or the longest is actually the winner.
That's right.
Because they're not only holding on to it, they can then reutilize that within their business in that meantime. So think of your customers. If you're getting paid within 7 days, the only pressure you've got in your business is things like wages and day-to-day expenses. We have supplier accounts so that we've got 30 days to hold on to. We can identify what that bill is, but we hold on to that cash so that we can have a safe space in case our clients don't pay us, in case anything else that needs to come up. But it's basically about stretching. So we're trying to stretch out the time that the money comes in until the time the money needs to go out. If we can stretch that out and put it off into separate buckets for separate purposes. We have some members, we have some people that we work with that have up to 10 bank accounts, because in their mind, if they separate it specifically out into those accounts, they know that everything is covered. If they need to use the money, they've got access to short-term cash flow, but they know that it has a purpose. And so it's kind of like, I know for me personally, I'm that sort of person too, and I've been in a situation where I had a really, really tight budget, and it was the line between, property purchasing or not, and all those sorts of little things. And rather than saying, I can't do it, I'm like, how can I do it? And, budgeting is a word that we don't like because it means that, I'm going to stop having fun. But if we can put those processes and plans in place, then if we know that we've covered all the stuff that is going to come out anyway, it's either going to cause you stress or it's just going to be there. One or the other. Most of the time it's going to cause you stress. So if we are able to push the cash flow out at either end and then utilize that, stick it into the right buckets, by the time you need to pay your suppliers, by the time you need to pay for other things, your customers have already paid you. You've separated out all the money that's not yours, and you've got the balance there to pay. Yeah. And there's a bit of profit in there depending on what your margins are. So it's really those that have the time in between the in and the out are the ones that get to grow. And a lot of that, what we can do with that space in between, we often have members saying, I really want to hire, but I don't have the cash flow. And this is where we say, okay, let's have a look at what that process is like, the in and the out. have we covered everything else? And what's the timing around that? Because if we have, like right now, we're sitting in early December, our next bus isn't due until the 28th of February. Now, we absolutely need to identify how much that's going to be and start putting money aside towards it. But that's 2.5 months away.
Yeah.
What can I do in that 2.5 months with that cash flow that can actually generate me more cash flow, and then I can put it back in to the coffers.
Spend money to make money.
That's exactly it. And it's not, I know I hear that it's an expense to hire someone. Well, yes, it is. And it's technically an expense, but think of it differently. Think of it as an investment. You're investing in an asset that is going to produce you income.
Yeah.
And if you've got your pricing right, that is an asset that is, it's producing you income, it's producing you profit. And, whether you've got a week or 2 weeks or 3 weeks of onboarding and all that kind of thing, if you can get that person up and running and creating, workflows and things for you within a short space of time, and you've got short cash flow churns, then the money's coming back in. Yeah. And it's coming back in at potentially double what you're doing now if it's just you.
Yeah.
Or more. Yeah.
Yeah. And that's definitely something I didn't understand in the early days, that, that sort of spend money to make money, because it at the beginning, it didn't make sense at all. Keep money, hold on to money, hide money away, put it under the mattresses. It's part of growing a business. It's expanding and investing in different areas. I love love everything you've said today. And I feel like the message that I want the listeners to take away is that having that clear, defined you as a person and your business as a separate entity. So
it's a boundary.
Yeah. Having those things separate and really understanding that, personally, you might loan the company something, but then the company will need to pay that loan back. And however that's worked, the cleaner you can have that system and that process and that plan, like you said, then the easier it's going to be. So tax time is a stressful time and you need to be able to, if you can make that time less stressful, then it's going to be a whole lot easier, right?
Absolutely. And I think the other thing is, and I didn't sort of mention this, is yes, we're putting money aside for all the debts and the tax office and all of that kind of thing. But if you can also be skimming from, if you can see that you're making a profit and you can see that things are healthy, and you can be skimming off some of that money into what we call a float account or a profit account or a long-term savings account. If you can see and build that up, then when you get to have that meeting with your accountant towards the end of the year, the exciting thing is if they sort of say to you, okay, well, let's do this, and back out your $20,000 that you've invested, because the business can support itself now. We don't need that. The good part about that is the cash flow potentially. Yes, if the profit's there, the cash flow should be there. But if you've identified that already and you've got this long-term savings account, if that long-term savings account is first step, pull out my initial investment, and then second step, what's my accountant doing with me? Am I identifying that as a wage? I've also now got the physical cash flow sitting there waiting to distribute however I see fit and however my accountants determine is the best way to distribute that income. And I think there's a beauty in that. It's like if you can see that bucket, even if it's only slowly growing, if you can see it growing, it's not a matter of, we'll get to the end of the year and we'll pay myself this additional wage, but I've spent it on other things, or something else has happened, or, I haven't got my processes in place. It's very clear that has a purpose, and whether that purpose is for, potential tax, whether that purpose, more often than not, you're going to get to the end of the year. And if that $100,000 was the baseline, and then there's adjustments and deductions and depreciation and all that kind of stuff, let's just say that gets down and it ends up being a $15,000 tax bill. If you've been putting funds aside and you've been putting away $25,000, you now can unlock additional funds that the tax office doesn't even want.
Yes.
So it's, that's that kind of long-term plan to.
And then you're bringing cash flow in for what you were saying before, what you can use it for, and to invest and to grow the business even further.
Yeah, absolutely. And I think that's the important part is just making sure that you've identified the business as an entity and yourself as a completely separate entity.
Mhm.
You may be the boss, but you are also just the greatest employee of your own business. So if you treat that like a line of, this is the business, I am the employee, I just get to control all of the other elements of how that looks. And I get to give myself a pay rise whenever I like, with good advice from an accountant or somebody in my financial world.
Yeah. Yes.
Yeah.
Love that. Thank you so much, Chantel. I feel like this is going to be like one segment of many to come. So I hope you're up for that.
Yeah, absolutely.
Trying to understand the business from a business owner is, I feel, complicated enough. But then when you're a little bit removed, if you're not necessarily working in the business, but your partner is working in the business and that's your family unit, even trying to understand, your combined income, it can be just mind-boggling.
Yeah.
So,
and look, the business can provide that, and I think it's important to have, especially for partners and family members, to have a conversation that is not about your income, my income, business, you and us and them. It's, what do we as a family or as a unit need from this business, and then let the accountant work out, who gets what and how much everybody is entitled to, because it's really just on paper the way to sort of transfer money from one entity to another. But if you're on board with each other and we know, okay, the business is over here achieving these things, we know what we need to survive out here. And I'm fully confident that whoever is the one that's running the business is going to go over and do that.
Yeah.
And then we're going to run our private lives privately and treat it as if they were an ordinary employee of any business that's out there.
Yeah.
And I think that's the key to just having that line in the sand rather than going, oh, woohoo, this is mine, because I see that woohoo moment turn into a, not so great time when the stress is involved. But if everybody's on board and understands that kind of relationship, all it is, a business is a vehicle to generating profit and lifestyle and income. So if we see it as that vehicle that sits over here that we just have some ultimate control of, then we can have some really great conversations around what do we do with it.
Yeah, that's awesome. Thank you so much, Chantel. I hope you have a lovely rest of the day, and I hope hope you're keen to come back on.
Absolutely, and anything we can help. I'm always passionate about having partners in sessions and working with both any of the people that are involved in the business, because it is really a holistic journey, and it's nice to see all those other friendly faces as well.
Yes, absolutely. All right, have a great day.
Beautiful.
Thank you so much. Bye.
Thanks, Frankie. Bye.